Alright, so on the previous video we journalized these transactions that were given to us on the quiz A through K. So we had a good handful of transactions that we now need to post to the accounts. Alright, so here are our T accounts, so I'm just going to go through the list. I'm going to go cash is going to get a debit first of $20,000. That was on letter A. And capital stock will get the credit. Okay, and I'm just gonna put a check for those two just to say that I posted those. Normally there's a number that's associated with the account that would go there, but for now we'll just put checks since we don't have the numbers. Okay, so supplies and accounts payable. So we're gonna debit supplies and B for $250, and we're gonna credit accounts payable for $250. And I'll put a couple checks just to know that we posted those. Cash and notes payable, getting a cash debit of $1,000. So it's C. And the note payable is going to get the credit for $1,000. Let me put a check. Check. Accounts receivable gets a debit for $450, and fees revenue gets a debit for $450. So accounts receivable is going to get D, $450, and fees revenue is going to get the credit D, $450. Okay, I'll check those two off. Utility expense and cash. Alright, so utility expense is here. That's going to be letter E, $270, and cash is going to get its first credit for $270. Cash and fee, let me put the check marks in there just so I know. Those are the last two that I did. Okay, let me just show you how I did that. Put the check mark there and the check mark there. Cash and fees revenue. So cash is going to get another debit for $200. So that's going to be letter F. And fees revenue will get another credit for $200. So let's go down there, and that's going to be F, $200. All right, just like that. Check and check. All right, so accounts payable and cash. So accounts payable debit now for $250. So this is G, $250. So you can see that that credit balance is not going to get canceled out by that debit, and cash is going to take a credit in G for $250. All right, check and check. All right, the next one is H. Cash is going to get a debit for $150. So H, $150. Accounts receivable credit now because the amount that they owe us is going down. So H, $150. Telephone expense and telephone payable. $160 is the debit to telephone expense, and telephone payable. Again, I made that account up here, so that's going to get an I, and it'll hold a credit balance of $160. Check those two off. Retained earnings $300, and cash credit $300. So let's go to retained earnings. It's going to hold that debit of $300, and then cash is going to get a credit for $300. So J. All right, and then cash debit for 500, and this last one here, cash debit for 500, and that is letter K. And unearned revenue is going to get the credit for 500. Okay. So we're done with all those, and now we just need to figure out the account balances. Okay, so a little bit of adding here. So for cash, just start slow here. I want to total the debit column. 20,000 plus 1,000 plus 200 plus 150 plus 500 equals 21,800. Clear that out, and then the credit side will be 270 plus 250 plus 300 equals $820. Alright, so I have those two numbers, and now I just need to subtract the credits from the debit side, because I know cash is going to have a debit balance, because I can't have negative cash. I'm sorry, 21,800 minus 820. So my cash balance should be 20,980. All right, on the debit side. So that's my balance. That's what will go to the trial balance. All right. Accounts receivable. This one's a little bit easier. I could eyeball this one. It's going to have a debit balance because it's an asset. So 450 minus the 150. My new balance is going to be 300. Balance it on the debit side. Supplies is easy. $250 is my balance on the debit side. Telephone payable will be 160. Alright, accounts payable is equaled out, so I have a zero balance, but that balance would go on the credit side because it's a liability. Unearned revenue is going to balance at 500. Notes payable is going to balance at 1,000 on the debit, or I'm sorry, on the credit side. Capital stock, we could just write balance there. Retained earnings balance on the debit side. Fees revenue 450 plus 200 will be 650 for its balance on the credit side. So those were our sales, and then our expenses were utilities expense and telephone expense. All right. So once I get all that done, that's called footing the T accounts. Creating footings for them, and then their balances would come off of the footings. That's adding those columns up are the footings, and then the balances are just figured by adding or subtracting. Okay, so that's where we're at right now, and then the next step would be to create the trial balance. So we'll do that as the last step.